Bitcoin Cash has lost 99.5% of its value in 5 years against Bitcoin. So the market's trying to tell you it doesn't like that idea. But the idea was wrong on the surface because there's no point in making money anymore if you're going to keep it. And so the idea of cash being trash was something that was drummed into my head March of 2020 when I realized I had $500 million of cash and it was going to be deemed worthless it was already deemed worthless by the investing public. Inflation is here. Hyperinflation is the rest of the world. It's not going away. The Federal Reserve said there is no inflation and interest rates will be zero forever. And now the Federal Reserve says, well, if we could just keep inflation from increasing beyond 8% forever, we'll declare victory. So it really it literally was a question of, do I buy $500 million worth of gold? Or in this case, it was $250 million of gold. Or do I buy $250 million of crypto gold? Mm-hmm. And if it's crypto gold, well, I think engineered synthetic gold is better than gold. And now I just had to parse through all of the hundreds of options to conclude that Bitcoin was synthetic gold. And that was enough to solve my problem in the near term, which, you got a mortality situation. You actually have to find synthetic gold. I find it. And that was Bitcoin. Now, what happened next was the exploding appreciation, that there is a profound demand for two things in this world. One thing is digital property. And I classify Bitcoin as digital property. Not just gold, right? Gold is the start, but if you go beyond gold and say a non-sovereign store of value, you might as well convert a second investment home. You're going to Airbnb, and you might as well convert land and buildings and any other store of value asset. Bitcoin Cash has lost 99.5% of its value in 5 years against Bitcoin. So the market's trying to tell you it doesn't like that idea. But the idea was wrong on the surface, because if you're changing the protocol economically, it's an ethical lapse. And so when you actually when you monkey with the block size, you're screwing with the economics for the miners. And when you're messing up the economics for the miners, you're undermining the integrity of transaction fees. And when you do that, you're undermining the integrity of the security of the network. So generally, I think my view at this point is any kind of software upgrade that materially changes the protocol for any reason other than to cure a fatal security bug is probably an ethical lapse, right? And you need to be very, very conservative on those things, right? You want to improve the security of Bitcoin, you spend billions of dollars buying Bitcoin mining equipment and turn it on. And then you spend billions on energy and turn it on. Or you want to improve Bitcoin, you buy $1 billion of Bitcoin and you put it in cold storage. That's expensive, right? You want to tweak a line of code because it makes you feel better. That's cheap, but it's a real moral hazard. And so I think that the Bitcoiners that fought that block size war and wanted it, they were on the right side of ethics and technology. I think if you look out in the future, the assets that win in the next 100 years are the ones that are technically sound, ethically sound, and economically sound, right? And if you're monkeying with hyper complicated software such that your network gets hacked or it crashes or it goes down, it's not technically sound. And every time you push a hard fork, you ought to say to yourself, in about a decade, I'll know whether I introduced a fatal bug. That's how risky it is. Like 5 to 10 years, probably 10 years later, you can say, well, I think the code might be technically sound. That's just how sensitive that is with regard to something like a layer one base layer. And I think with regard to economics, right? You can't change the economics of the network. So when you destroy the miner's economics, you destroy the integrity of the network. And when you advantage one constituency over another constituency, you undermine the integrity of the network, and then nobody trusts it. And you have to be able to extrapolate out 100 years in order to trust it. So I think that conservatism on the base layer is important. As for what I think will happen over the next 30 years, I have a model which is multi-layered. I mean, this simple model, which is, okay, there's a layer one and it does everything. That's just too simplistic and monolithic. And I just think it's wrong. It's intellectually bankrupt and wrong. That's one of the problems with the thousands of cryptos that think that they have to build layer ones to do transactions. It's just a wrong idea. The universe doesn't work with one element, and it doesn't work at one frequency. The most stable one is Bitcoin. It's proof of work. It needs to be a commodity. It can't be a security. Can't have an issuer. It doesn't, 7 transactions a second is fine. Doesn't need to do any more than that. If I could move all of San Francisco every 135 milliseconds, it'd be too fast. It's fast enough. I just want to build something on San Francisco. You could put $100 trillion of monetary energy into the base layer. You could put $500 trillion of monetary energy into the base layer. Doesn't need any more functionality. We just need for no one to break it, right? Mm-hmm. That's why I say we don't really want well-meaning engineers like meddling with the base layer. Just don't break it. Leave it alone. Now, what's above it? Well, what makes Bitcoin ethical is the fact that it's open and permissionless without an issuer. So the layer 2 would be Lightning, which is an open permissionless transaction protocol, not moving or storing $500 billion of value, but storing $50,000 of value. If I reduce the amount of value at risk by a factor of 1,000,000, I can increase the speed by a factor of 1,000,000, right? And the functionality, I can decrease the cost of transactions by a factor of 1,000,000. So I think that it's clear the world wants one open permissionless and open source protocol for transactions. It wants one for money. In theory, the monetary layer is a winner take all. We're going to collapse to that. That's Bitcoin. Could you have a competitor to Lightning? Yeah, in theory, right? You can create a competitor to Lightning. The thing that makes Lightning ethical is that it runs on the Bitcoin token. Right? If you run a crypto asset with a different token, it's probably a security, which makes it not ethical. So I think that you can create other open source protocols. Linux is an open source protocol, right? Lots of them.
Sure.
And then moving to the last issue, I don't think the world wants currency. So understanding that money is composed of property and currency in the current environment. The currency is high velocity money and the property is low velocity money. And the reason that currencies will continue to exist, like the US dollar and the euro and the yen, is because nation states will continue to exist. So until the European Union crashes and the Japanese government crashes and the US government is gone, there will be a currency that's mandated as a medium of exchange by that nation state. And the trend over the next 30 years is that the strongest digital property, a la Bitcoin, is going to eat into $500 trillion worth of property. Gold, precious metals, real estate, bonds, equity indexes, collectibles, however you store your money for the rest of your life. And then the strongest digital currency is going to eat into the economic value of the other currencies. Right now, there's probably $200 trillion stored in currencies, currency derivatives and the like. Another form of derivative is any country that issues a currency that is backed by Bitcoin also becomes a Bitcoin derivative. Currency is just like the stock of a country.
Sure.
And then layer 5 is Bitcoin products like Open Dime, when you embed some asset into the hardware device. Mm-hmm. And layer 6 is a service like insurance or any kind of other offering that has Bitcoin or some of that embedded in it, a digital asset. So if we come back to your question, which is, will countries do it? Well, the countries were on a gold standard till 1914, and everybody gets off the gold standard. The Treaty of Genoa in 22, I guess, is a gold reserve standard.
Right.
And then, we eventually have a Bretton Woods, another gold reserve standard. But we were never one-to-one backed. We had a small ratio of gold And maybe the ratio was 100% in 1914, and maybe it was 40 or 30% at Bretton Woods, or 20%. And it was probably 5% by 1971 when we threw it all away.